Hold on for a wild ride. Stock market takes a tumble yesterday, and the Fed meets with their big announcement this week on the future of interest rates. Let's dive into what's happening in the mortgage world. So S&P 500 down. This is Tuesday, January the 25th. We're down 87 points. Yesterday we were down more than that on the S&P. It dropped all the way here, and then very end of the day rallied back. That rally is short-lived as we are still reducing the amount in our 401k right now. I think we don't need it quite yet. What is that doing to mortgage rates? So what's happening here is money's moving around, right? So money moving out of the stock market is a beneficiary. The mortgage loans or mortgage bonds are the beneficiary. So we've seen a huge drop in the price to mortgage bonds. In the mortgage bond pricing, the red days are bad days. That means the interest rates are doing the opposite. There are interest rates going up while the price is falling. We've seen 5 days of improvement here since the bottom. If we can stay above the level identified here, we've got room to the upside, taking us back to what would have been the averages. And real quick, in a 1-year basis, just get a little bit of clarity. If you follow what happens over time with different types of bonds, you get really what happens is the bonds follow the average. I mean, the average will turn, and when the Federal Reserve says they're going to raise interest rates, well, bonds reply. But what happened this last couple of weeks is bonds have fallen way below the average, the 25-day average, and they're starting to bring themselves closer to the average. And I go through a year of history here to show we've had time periods where we've gotten way away from the average and it comes back. Now, the trend ends up remaining as downward trend. There are times when that 25-day average will level out. We've had more or less level interest rates for the last year up until November, where we fell below that level, that average where we were in a nice comfortable spot. Interest rates well below 3%. We got lower on the price, higher in interest rates, closer to the 3% to 3.5. Now we're seeing rates well above 3.5%. And they've got up to close to 4%, and now they're kind of bringing back into hopefully a happy place. So as we get into the week, get into the year, keep an eye out on the news. The Federal Reserve is going to have their meeting and announcement this week. They are going to stamp down inflation. That is their goal. And if they do it, in my update here, I'm talking about taking away the Punchbowl. I mean, they have basically been feeding the party maybe a little bit too much alcohol, and here we go. If they take away the Punchbowl, it's going to take a little time to wind that down. Let's see if they can hit the mark. Have a great one.